Well, folks, this is T. Brian Hayes here from Hayes Advisor Group with your March 2015 Educational, Economic, and Market Recap. We hope all of you had a wonderful Easter and celebrated this great holiday with family and friends. In this month's video, we'll talk about some of the economic events that influenced markets in the last month and give you some insight to what they might mean for you as an investor. As always, please stay tuned at the end for a required disclosure statement. After several rocky months for financial markets, March turned out several straight weeks of gains, giving investors hope for the spring. But is this just a typical head fake in a bear market, or is it a sign that markets are turning back bullish? We'll discuss that in a minute. Last month was also important for central bank policies. The European Central Bank, Bank of Japan, and the Federal Reserve all held meetings to determine monetary policy. In recent years, there has been a divide between the Fed, which is moving away from ultra-low rates, and European and Japanese central banks, which are fighting slow economies and negative rates and quantitative easing. However, discussions at the March Fed meeting show that U.S. economists are also becoming more concerned about growth. During the March meeting, the Fed voted to hold rates steady and indicated that officials are planning for a slower pace of rate hikes this year. However, remarks after the meeting show that the Fed economists are divided. Some officials want to start raising rates soon, while others favor a wait-and-see approach. However, Fed Chairman Janet Yellen has been clear about her intention to remain cautious in the face of global risks. So we're going to be closely monitoring the data to see whether the economy can support additional rate increases or not. Will they raise interest rates in April? It's hard to say, but it's not likely. Currently, most economists predict a June 2016 interest rate hike, but there's always room for a surprise if the data looks good. Now let's turn our attention and take a look at the financial markets for March. As we said earlier, March was a good month in the markets, erasing some of the losses for January and February. However, we still remain in a high-risk market environment. Canterbury Portfolio Thermostat model still has us in a bearish market environment, and many other money managers are bearish as well. Even though volatility has been decreasing over the last month and a half, it's still high. Based on many indicators, the market's recent positive run, in all probability, is just a typical kickback rally in a bear market. These rallies are typical, followed by another downturn which retests the lows in the market. So in our opinion, now is not the time to get aggressive again with your portfolios. Continue to read the weekly market condition updates that come out on Mondays and stay on top of the market condition and get the most recent updates and changes. So that'll keep you posted where we're at. So that's it for the March Educational, Economic, and Market Update. As always, if you have any questions or concerns about what we've discussed here, please give our office a call. Once again, this is T. Brian Hayes with Hayes Advisor Group, signing off for the month of March 2016. Remember, nothing we talk about here is a recommendation. If you'd like to discuss your personal financial situation, please give us a call at 1-800-939-1603. We'd be happy to talk to you. Until next month, we'll talk to you soon. Give us a call if you need anything.